It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we break down for you the Australian property market. Yes, and if you are a new listener, we have now over 1,600 real estate episodes for you to work through the back catalogue. It is a lot. Anyone who is anyone in the real estate market we have spoken to, the leading voices throughout Australia. Now, if you've got a subject too that you think that we haven't covered and you'd like to hear more of, get in touch with us. The email address, as always, is myrealestatepodcast@gmail.com. It is a Tuesday. Yes, June the 10th. Bit of a shout out and a spotlight on a couple of areas. George's Hall and Condell Park, both around 24k southwest of Sydney CBD. Both suburbs fall under the local government area of the city of Canterbury Bankstown. George's Hall, the median house price at the moment is around 1.5 million. That is reflecting an annual growth of approximately 10.7%. Median unit price just over 870 grand, and that has got a growth rate of 3.7% over the last 12 months. Condell Park, that has seen even more aggressive appreciation, particularly in the housing segment driven by limited supply there. Median house price is just over 1.6 million. That is up 13% year on year. Median unit price 990k, showing a strong annual increase of around 8.8%. Just for context, a two-bedroom there in Condell Park will set you back 800k, and a three-bedroom unit around $975,000. So there is a bit of movement there. George's Hall and Condell Park. And good morning if you are in either of those locations listening to us, as we head off to Sydney to catch up with Erin Kitson. She is a director for SP Global. And welcome to the Real Estate Breakfast. I know that we were talking late last year, Erin, and you guys have got a report out. So what's the report all about?
Well, hello, and thank you for having me. Yes, we have just published our Q1 2006 market overview for our residential mortgage-backed security performance watch. That's quite a mouthful, but basically what this report is really a pulse check on the mortgage arrears that we track across all the various loan portfolios that we look at. So it gives us a good sense of how debt serviceability is tracking across the country.
Yeah, it's always a big one, especially when you've got the rate that has been lifting this year. Let's have a look at Victoria, because it is now recording the highest mortgage arrears levels in Australia as of March, and a big part of that comes down to a softer local economy and weaker property market conditions.
Yeah, correct. Look, mortgage arrears really are driven by a couple of key macroeconomic factors. First and foremost, interest rates, and they affect everybody, and particularly because Australia is a mostly variable rate mortgage market, mortgage arrears are sensitive to interest rate movements. And also property market dynamics and unemployment. And unemployment is key because, loss of income is a key cause of mortgage default. So if we have put a bit of a spotlight on Victoria, we've seen arrears progressively increasing in Victoria for probably over a year now. And that really reflects Victoria's more elevated unemployment rate relative to the other states, but also what's been happening in property markets there. Victoria's property markets, as many of the listeners on this podcast will know, have been softening, and softening property markets can have, impacts on arrears because they can make it harder for those more financially stretched borrowers to voluntarily sell properties to get out of arrears situations. Victoria's held that top spot for some time now.
Let's have a look at Sydney then, because that is also high with budget announcements. What does that look like moving forward?
Look, I think Sydney as well, or New South Wales and Victoria, whose arrears are really largely influenced by what's happening in Melbourne and Sydney, their arrears are higher there as well. For both of these big cities, what we've tended to find is, there are a number of people with higher debt to income levels in these areas because of property prices, higher price tag relative to people's income, particularly, historically. So that makes, borrowers in these areas more sensitive to going into arrears. So, that particularly in Sydney with much more higher debt to income levels there, a given property's high price tag does increase borrower sensitivity to interest rate rises. And we are seeing that play out in the mortgage arrears data. And also, Sydney's arrears performance going forward is going to be impacted by what happens with property markets there, particularly in light of those recent budget announcements and their impact on investors, given that there is investors have quite a large existing property footprint in Sydney. So I think that will be an interesting one to watch to see how that plays out.
Yeah, especially when you guys do your next report. I think the devil is going to be in the detail. Once this kind of packs down and you've got some more of those bullet points coming through around what the investor behaviour is, that could paint a really interesting picture in the future.
Yeah, very much so, particularly around how investors decide to behave in light of these changes. I think will be interesting to see how that flows down to arrears. But I think it's important to remember overall that we're expecting unemployment to remain low, and that is the most critical influence of arrears performance.
We are talking to Erin. She is back in just a moment with more.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
And right now it is time for another property tip, and we are going into Victoria. Recently we spoke to Anthony Webb from Bell Property. You've got a property tip here. It's all about, I guess, doing the due diligence on property.
I think it really is. One of the things I advise a lot of buyers to do is when they're buying a property in a suburb, don't just choose a suburb, really get to know that suburb. Everyone knows that there's good parts of suburbs, bad parts of suburbs, but I think when people are doing their searches online, they don't really know where those good and bad parts are. So going in and having an explore, seeing where the train lines are, seeing where the shops are, seeing where the busy roads are, they can have a really big difference. In some suburbs, just being in a certain school zone can add 10% to your price when you eventually go to sell, versus being outside of the school zone. So knowing little tips and tricks like that around the suburb, I think is actually really critical. And like I said, it can be the difference in your eventual sale price by about 10%.
Don't forget to subscribe. We have so many episodes, all designed to help you better understand the constantly evolving and dynamically changing real estate property market.
Now, I see that one Sydney apartment owner who bought into the market late last year is already feeling the pressure of the changing market conditions. After stretching financially to secure a small apartment for stability and long-term security, there are now concerns that the property may already be worth less than the original purchase price. Sydney values have softened in recent months, as we know, coupled with changes to negative gearing and capital gains tax. That has added another layer of uncertainty across the market. And for many first-time home buyers, particularly those who entered with smaller deposits, the fear now is not just higher repayments, it is the dreaded possibility of slipping into negative equity if prices continue to soften. So that is not a great look, negative equity, particularly within a 12-month purchase price. Let's go back to you, Erin, because I'm sure that is something that is such a big talking point. Again, we're going to see that sort of unravel. We've got the geopolitics happening at the moment. Nothing is really stable. Nobody can really predict where we're going to be in 12 months' time.
There certainly is a lot of heightened uncertainty there. And I think, as you pointed out, one of the risks for more recent property owners, particularly younger borrowers, first homeowners who've had to really stretch to get a deposit and have higher leverage levels relative to their incomes, means they are more sensitive and vulnerable to rising interest rates, but also a softening in property markets and reduced equity, or in some cases being in a negative equity position. Very, very problematic if you have a negative equity position and you're also struggling with mortgage repayments. So provided unemployment remains low and these borrowers can continue to maintain their mortgage repayments and don't need to sell, that should be okay. But it does, increase risk overall if a softening in property markets for these more recent borrowers has more people in that situation.
Yeah, when it comes to borrowing money, lending standards and competition, how do you see all of that unfolding? Like, are the standards going to be kept up, maintained?
Yeah, I think I'll break that question into two parts. So on the competition piece, what we've certainly observed is, and it probably is a reflection of the number of particularly more non-banks coming into the market, which has certainly increased mortgage competition, but also the big advances in technology and AI and digitalisation, which is helping to just speed up loan processing times. So those two, parts combined have led to a lot more competition in the market, particularly around refinancing, trying to, get existing borrowers to refinance to new lenders. It can be helpful from a mortgage arrears perspective because a borrower who might be feeling a bit financially stretched, one of the ways to alleviate that is to go and refinance onto a more competitive rate. So more refinancing, more competition can be helpful from an arrears perspective. From a lending standards perspective, though, there can be downside impacts of that. And, if you get a lot of competition, you can get erosions in lending standards. The banks obviously are regulated by APRA, so they are beholden to, having to maintain a certain level of, underwriting standards. But where you start to see some shifts play out more in underwriting is what happens in that non-bank space, given they're not directly regulated by APRA. One of the areas where we start to see shifts is, for example, in the use of lower interest rate buffers, for example, in debt serviceability assessments by that non-bank cohort, which is still, a small overall proportion of overall mortgage lending. But, one of the downstream impacts of more competition is you do start to see shifts in lending standards.
Yeah, you've unpacked quite a lot there for people listening this morning, so we'll wrap it up there. So many talking points to think about in the future. We will get you back definitely when you've got that new report coming out, Erin, because I think there's going to be quite a big distinctive change from where we are to what is the future going to look like. Thanks again for coming back onto the Real Estate Breakfast this morning, and enjoy your Tuesday.
Thank you.
We dive deep into topics like buying, selling, investing, and maximising your property's value, from mortgage advice to the latest property data and trending numbers. Your real estate journey starts here. Ready to take your real estate knowledge to the next level? So are we.
Selling something off the plan was a really challenging task.
Some of these markets do have a higher concentration of investor activity.
Let's fuel your passion for property together.
500,000 Aussie will certainly get you a nice 2 or 3 bedroom villa.
Greg, it's incredible. It's phenomenal.
Brighton, there was a record set on the Esplanade for over $6.5 million.
Should not be charging any buyers for the service that they're offering.
Remember, we are not a real estate company.
With selective growth, there's parts of Melbourne that have grown really well.
Explore new property destinations where you could live.
I feel that people are choosing lifestyle and where they want to live.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips. We connect you to the best real estate information across Australia. The Real Estate Podcast.